All right. Time-based liquidity, part 2. That'd be part 2, the second video for it. All right, here we go. So this one, I'm just gonna kind of go over how I use this. So I'm on the higher time frames. A lot of times I'll even go to the daily and I start looking at daily lows, daily highs, daily fair value gaps. And these to me are just time-based liquidity zones that I need to pay attention to. Okay, looks like there's even like all kinds of a wick gap right here. I would pay attention to this. So actually, I might even just extend that out a little bit. There was one right here. Okay, these are just things that on the high time frame I would be looking to pay attention to. And then so on, right? There's some here. There's a fair value gap here. So what I would do with this wick zone actually is I would just move this up. Now, if I were to wait for this trade, I mean, we could range in here for days. So I'm not paying any attention to this until I move into it. But I need to understand that this time-based liquidity is there. So that way, if we move into it, I know what to do. Okay. So that's another time-based liquidity is candles high, candle lows, previous day high, previous day low, right? So for example, here and here, those could be time-based liquidities that could be applicable to my actual my trade day. Okay, I can move into the week. All right, previous week high, previous week low. Those are just time-based liquidities for me to pay attention to. Okay, because maybe coming up in the next couple of weeks, and this is just me talking. You know, we could do here. Yeah, let's just go ahead and do this. Boom, take out that time-based liquidity and move up. Okay, that's something that could happen. But how am I going to know that we're at this week's low down here? And maybe I'm framing a trade right here. Okay, maybe in this day after we've swept it and we've displaced back, maybe now I'm bullish for a short period of time. Okay, so these are things to pay attention to. This is how I use time-based liquidity. All right. So pay attention to your weekly fair value gaps, your weekly highs and lows. All right, your weekly swing highs and lows as well. Okay, these would be something I'd pay attention to. All right. So when I do the analysis on my day, I'm just going to make sure that if I'm overlapping some of this stuff that I know. Okay, if the market moves down in this direction and we sweep this, I need to be aware. Okay, I need to pay attention on this day, which could be a month down the road or even longer. But I want to know. So that's why you do a top-down analysis. I actually do top-down analysis every day. I do this all the time. I right-click, remove drawings. People have told me about the little tools on the side. You can keep visuals, and I honestly just don't keep track of it. I just go for it. I do my analysis each and every day, and it just seems to work for me. It brings it back to my brain. All right. So when I'm on the 1 hour and I'm looking at like sessions, I use sessions a lot. We talked about that in the last video. So that's how you would do your time-based liquidity for your actual time frames for your weekly, your daily, your 4 hour. Okay, so let's just kind of, since I do this daily, it's just kind of something I do. But you're gonna mark your highs and lows, right? And fair value gaps. Okay, and you're gonna do that on your large time frames. So like on the weekly, daily, 4 hour. Whoa, not dollar sign. We want dollar signs, but not like that. 1 hour and below. Okay. As you start to move below, obviously you're framing your trades at that point, and you might be looking more at entry models. But your time-based liquidity is going to be huge. Okay, especially session time. So start paying attention to this. This is a really big thing. Pay attention how price reacts. Okay, I mean, here's a great example. We had a fair value gap here. We took external liquidity right here. Okay, and we push up. What did we move back into? An internal base liquidity, and then we moved back to an external base liquidity. Well, how are you going to know that these zones are up here? Okay, this was actually a zone that I was paying very, very, very close attention to because it was a double high. Okay, because I had New York and London pretty much, I mean, probably not to the dollar, but dude, that looks like to the dollar. I remember watching this like a hawk. Okay, and what did we do during the Asia? We pushed up, and what are we gonna do? Right, I'm gonna pay attention to what's going on. 7:30 open. We took the London lows. We bust through. Okay, we had a massive dump that day. All right, so this is something that, they were clearing all of these highs up here for a bigger move down. Now, if I hadn't been paying attention to the larger time frames and I was legit looking at nothing but the 15-minute down here, okay, how am I going to know that this whole move through these two sessions was clearing a larger time-based liquidity double high? All right. So that's just something to pay attention to. So remember to mark your highs and lows and fair value gaps on your larger time frames and keep track of them. Like I said, I do them daily. I just like to look at exactly what's going on around my day of trading. But a lot of people keep them on their charts and they use the layers and trading view to mark them. So I hope this was helpful. And yeah, these are actually the easier time frames to keep track of, but they can play a significant role in your trading. So keep them on your charts and keep aware.